everybody. Here we are, like birds in the wilderness. Well, tell you what, this is not my favorite thing to see right there. Makes me a little nervous. I really like to see getting out of this range right here. It's like, where did this little range thing come from? We're even right there where we topped frickin' July. And we're stuck right there. August, September, October, November, December, January, February, March. 8 months later, we're stuck in that same frickin' spot. Couldn't get through there here. Couldn't get through there here. Didn't even provide support coming back down. I mean, it did here. Right there, we just sliced through. Came back, just sitting there. Giant OpEx today. $4.7 trillion of notional options value. That means if you take the options, you roll them out to the stock value that they control, $4.7 trillion. Now, a large chunk of that comes off at the open. A large chunk. Right at the open. What does that mean? Let me pull up the chart and show you. Right here. Pop it out. Pull it over. This is what I'm talking about. 2.8 trillion of that is morning options that expire at the open, including, it's 3 trillion really, because it includes the 160 billion of non S&P 500 options. S&P 500 options by far. These index options by far are much bigger than any other options out there, including SPY, non-SPY, single stock, way bigger for these SPX options right here. If you have no idea what I'm talking about, never seen the SPX options, like SPX, I've never even traded SPX options. Well, guess what? There's a whole, we can't even see them. Like, this is the crazy thing. You can't even see them on TradingView. Like, they don't even have index options. Index options are a whole different game. You can't get early exercised. And you may be like, well, how would I play them? I mean, you can play small with XSP. It's an index option right here. It's one, just 1/10 the size of SPX. You can play SPX. You can play IndexX options. So it's kind of wild when you think about it, that there is $2.8 trillion of S&P 500 options coming off right at the open in like 10 minutes, basically. Wow. And then you look at the afternoon expiration, way smaller. Only about 390 billion. Only 390 billion. And that's, rolling it out, taking the value of the option times the number of, it's not shares when you're talking, well, there's no shares in SPX, right? It represents units. You can't get, like, if you executed your options, you get cash. So these options, more than any other options out there, actually represent cash value. These index options. And VIX works the same way. You trade options on VIX. So it's a different game. But, single stock options, $645 billion of options hanging out there. Not too shabby. Non-SPY ETFs, that's like all the other ETFs. SPY just by itself is $330 billion. Pretty wild. Those big, showing my personal information, thank you. Those big options. Look at this. SPY. 10 million options right there of volume. Kind of wild. 5 million on QQQ. 3.3 million. I believe this is just one day. Current option volume. I think that was yesterday's option volume. It's just wild right there. Absolutely wild. When you think about that. You look at the open interest rank. That's kind of wild too. These are in the 100%. They've got the most open interest they've ever had. All the way down through here. And you may be like, where the devil are you pulling this up from? This is Market Chameleon. They have all sorts of options tools, implied volatility, options volumes. You can go pull in here. This is actually where I use this tool to grab the pre-market trading thing right here and build the list. What's moving up? $2 or more up, $2 more down, and build that list. So if you've never seen this before, it's a cool little tool. It's free. Like I'm free. I'm not even logged in. I'm not anything. So handy dandy little tool, help you dig through options chains and stuff like that. Anyway, how's it doing, everybody? How's it going, everybody? Yeah. Don gave a great example at the top of the chat there. If you took $4.7 trillion and stacked it in $1 bills, think about it, dollar bill, thin as paper, right? Stack 4.7 trillion $1 bills on top of each other. That would be like 318,000 miles tall, well past the moon. It kind of blows your mind a little bit when you think about that. Put it in context. Darren Haig, Lieutenant Colonel Goose, good to see you as always. Major John, good to see you as always. Logan, Amy, Diane, Al, good to see you. Sergio, my friend. Chris, as always, Joy. And Joy, good to see you. Will, Ted, Ryan, Diane, Be Like Water, Donald, Jason, Ted, Svenborn, all the way from Iceland. Mark, Joseph Rongamer out there fixing Teslas. Hopefully nobody burns a local dealer down. Welcome, everybody. Welcome. I know you'd be upset if they burned the dealer down and all your tools went up in, of course, metal tools. But they'd be pretty unusable after. Yeah, that'd suck. Anyway, welcome to the show, everybody. $4.7 trillion of options rolling off today. We'll see. The majority of those were puts. So upward bias, but seems that we have some downward pressure coming into the open here. Seems that somebody needs this to sit right in this zone for the OpEx today. Kind of interesting. They're actually, so the way this goes, wherever we actually open will be like back calculated into the options for the S&P 500. So you don't even know where, this is the tricky part about morning expiration options. You don't even know the expiration price until after the open. It's kind of wild. It's a dangerous game to play. But if you're hedging some stuff, that's the place they play, right there. Yesterday we had Bitcoin down and closed red. Today we got Bitcoin down and we might close red again. Just throwing that out there. A potential. Now if we make just throwing this out here early, just in case, if we make the lowest low today, somehow we get down here, it's probably going to prolong this into next week. We do not, it's like 90, but somewhere, I wish I had the exact statistics, somewhere between 90 and 95% of the time, we do not make the lowest low of a period of time, like more than a week, on a Friday. The market just doesn't make a bottom of a correction on a Friday, typically. That leaves 5 to 10% of the time we do, but the majority of the time we don't. So if we were to flush down here, sets up a high probability that Monday, Tuesday, Wednesday next week, we'll probably get some sort of continuation. Doesn't mean we won't bounce first, but highly likely to come on down. We've already seen that play out a few times on this correction on down through here. Yes, indeed do. So this is something to watch. We may need to come back for that 618% retrace right there before we can gain the energy to come on through. This is another friend of mine looks for that pattern. Was it a PWFG trade? So might work. See. Not sure. Not sure. Looks like, oh man, we busted through the 30-minute. Not good. Busted through the 1 hour, busted through the 30 minutes, well below the 15. Yeah, we don't really have any support on us right now on ES. We're down below all the roadmap lines. Things could get a little saucy today, is what that says. Definitely a little bit nervous about this. That move up. Maybe a 5-wave, but really it just looks like one big pop. Makes it difficult to glean anything out of right now. That's what you wanted to hear, right? Great news, JT. Thanks. Sorry. I just do my best to predict everything best I can. I think this will be the low. Not quite sure. We got to get through today. I've said that for a while, that we have to get through the OpEx. We have to get, and we may not be able to move until into the quarter. We have a whole nother week of just chopping around down here before we can push this on out in April. All right. Be careful out there. That's the permacautious. If you can't stand more downside, you better have your ejection plan in place. If you can't take more sideways chop down here, better figure out what your plan is. If you can't stand upside rip, you better have a plan in place for when we break through some of the stuff. What's going to happen? If you're super bearish and you got tons of puts, you just know we're going lower. Where's your exit plan if that's not what happens? If we hold that 618, turn back higher, where are you getting out? Where are you bailing? If you don't have a plan, if you don't have some sort of alerts, even Wrongover yesterday was telling me, man, I got to start setting descriptive alerts like Sledge and you were talking about, and others been talking about. So all trading involves a substantial risk of loss, is what I'm saying. Past performance not necessarily indicative of future results. Just because you've been good before, or I've been good before, or I predict things and they come true, doesn't mean that it'll ever happen again. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument out there, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you desire personal financial advice, you just want somebody to tell you what button to push and what to get into to make a bunch of money, you're going to have to go hire a financial advisor that does that sort of thing for a living, because that's not me. Now, we're at the OpEx, and that doesn't show up on our economic calendar at all. Next week, rolling into the last full week of March. Monday, we get a few things, but not, that's after the market opens. We get some flash manufacturing PMI, flash services PMI. Is manufacturing actually recovering like they think? I don't know. We'll see. These numbers don't really mean anything to the market. The market, it's like an excuse to create volatility in the market, but it's not really like a market moving information. Like, think about it. Nobody here has ever admitted to making any trading decision based on any of these economic numbers. I welcome somebody to tell me how they trade based on these economic numbers. The mainstream media is always like, well, traders said blah, blah, blah. We're all traders. Do you make any decisions based on these? I don't. Just straight up. So Wednesday, we get some core durable goods. That's not really a big red mover for the market. Tuesday, we get the home sales. And looking on down, Thursday, get some GDP numbers. That might be interesting. I don't think they've cut enough out of the government spending to make any difference yet. So expect that to come in line pretty much. They're forecasting 2.4. We'll see. We'll see. We got a long way to go to $2.2 trillion a cut out of the federal budget. This one might be the most interesting of the week. Next Friday, PCE. It's Powell's favorite inflation read. CPI. Didn't really say much. PCE, is it going to say much? Or we're going to not say much. I mean, I don't know. Seeing oil prices just kind of fluctuate. Fuel prices kind of fluctuate. Looks like the rest of the world catches up to daylight savings time next Saturday. And then we'll wrap up the month. Wrap up the quarter. This is the big OpEx for the quarter. So we'll see what happens. Bunch of alerts firing off. Probably stop some stuff out. Ouch. Little gap down. S&P. I always look at the futures because they move 23 hours a day, 6 days a week. This might have to come down to this level right here, 50. I gotta zoom in to see it better. Yeah, 55.87. That'd be the place where I expect it to come down and test right here, 55.87. If we get below 55.60, I think yesterday I said like 55.50, maybe 45. We get below that, probably going lower low. And if we do that today, it's probably going to extend into next week. Just not awesome, right? So I really want to see this area hold right in here. We could hold right where we are. That'd be perfect. Hold right where this little consolidation was before we did this last little pop. 50% retrace. And then take it higher. That would be super swell. Super swell. But that sets the potential next move. If we hold right where we are right now, go blasting off, get back above these highs, rip on up, crush the daily, crush the 4 hour. That sets us up to come right up here. 59.50. Probably get a retrace back to the daily and the 4 hour, or we can push this on higher. So this is kind of what I'm watching right here. This next move. Very important. Like we can go down a little deeper. Doesn't matter. If we start turning here, this next move sets us up for a nice big pop, despite everybody thinking it might not. Major resistance between 5,800 and 5,900. Major resistance. But if we could just rip that right through, get up to that 59.50, back test this area, set for going higher. That'd be pretty sweet. I'm bullish. I'm position bullish. I got my hands tied and I'm thrown off the boat when everything did the extra leg down. Even though I expected it, I didn't trade for it. Stupidly, maybe. So I'm just sitting there kind of margined out right now. Sitting there waiting. If we take another big spill down, the reason I'm partly so adamant about you're going to have to make your decisions is because I'm probably going to have to liquidate a bunch of stuff if we take another spill down lower low. Bitcoin, I'd really love to see this get the fudge away from this area. GTFO, get the fudge out of this area. We've got the downtrend highs cooking. I really want to see this. I want to see this break. This kind of rejected right here on the futures, on the spot market. Pretty much the fire truck. Pretty much the exact same thing. And we had the roadmap line there too. Love to see the test, but I wanted to break through. So we've got this kind of cooking right here. Downtrend highs. Didn't even quite make it all the way up there. At least not on this chart. This is Bitstamp's chart. Let's go look at Coinbase. All the exchanges are a little bit different. All different prices, different. So we've got this kind of sitting here. I've actually got an alert for a trend line break on Coinbase. Not quite as clean on the rise there. It actually got a little small arc to it. Not my favorite. Pinned in here. If we can gain that energy to break through, we may have to do a little back test before we can get some upside going. That's what I want to see. This is what I'm looking for right here. If we get below here, right there, that low from earlier in the week, back below 76,000 on Bitcoin, not looking good. Not looking good. The line in the sand right here, this high that we made right before the halving back in March of last year, we need to stay above that level. If we do any further downside, if we start getting below that level, the crypto rally's probably done. That's a significant technical level right there. That's a first, that'd be the first indication that our crypto rally is not going to rally. Now, it doesn't mean it can't go, it can't go on a deeper retrace and still be fine, but if we get below there, that sets into play a move like this. Way down in there. And that's going to hurt. It's going to hurt me. I ain't gonna tell you. I'm gonna have to liquidate a bunch of stuff. So, reality time. In queue, few people are agitated. I'm not placing as many trades right now, but I'm margined out. I can't. Hands are tied. Don't have cash. Not bringing in cash. Despite all the things I do, there's no cash coming in at all. So, sit and wait. Not my favorite place to be in. It's like the perfect storm of stupid stuff that I got myself into. Despite my best planning, a few things went sour all at the same time. Not just the market. So we've got NQ right here. It's NASDAQ. I'd love to see this break through, get higher. Same situation. Same situation right here. I had almost 20,000 shares of Mora on this drop, so I'll probably have to liquidate quite a bit of stuff. I'm not in virtually any other miner but Mora, so miners is a misnomer. I'm not really in many miners. Need this 19.5 level to hold on NASDAQ. Come on up, bust through the daily roadmap line. That would be what I want to see. I'll probably be out of almost everything crypto-wise if we start breaking down below the March 2024 high. That right there, that's what I need to see. Hold this 19,500 area on NASDAQ. Break back above the daily roadmap line, and that should take us up to about 21.1. Probably come back and test the daily roadmap line before we go higher. Right there. And I'm not taking attendance, Diana. Craig, Jesse, Ed, Charlie, Laura. Good to see everybody. Douglas, Merle, Robert, Jan, Jody, Craig. See, we got Jay, Rick, Arlene. Don't want anybody to feel left out. Rosalind, Larry, Ed, Craig. All my subscribers, all my channel members. Just love seeing everybody hanging out with me, checking out the market, seeing what's moving. Where's the opportunity? So this is the opportunity right now. If we hold this right in here, high potential for this to explode higher. I know several other gurus are not expecting us to get bullish. Everybody's kind of expecting it to go lower. That's the perfect opportunity for this to turn and burn. perfect opportunity for this to turn and burn. And not just like, I'm not just saying burn, like rip higher. I'm saying like burn people that are short the market. Look at this. I mentioned that this would probably give you 1 to 2 days and then probably do a reversal. Highly likely, highly likely. We get right back down to this line right here, right around 14, 15. Then it gives us the next potential to bounce. I mean, look, 15 line, bounce. 15 line, bounce. 15 line, bounce. 15 line, bounce. I mean, why would you expect anything else here? This is probably going to come back down. Back down to that 15 area. And before we get the next big flush in the market, the real big flush, the big surprise, we're probably going to have to come down to this $8 to $11 area right down here, where we typically bottom VIX before we get the next big pop. So that supports going higher in the market, because going higher typically reduces volatility. We haven't really been down to those lower levels, at least not with much enthusiasm. Now, this is why I say you got to be careful. It kind of warns when we get to that lower level area. See what we did right here? Spiked up, came along. There it is. I knew it was coming. That right there. Look at those dates right there. We're talking about 2024, May, June, July. May, June, July, late May, June, July. Let's go look at what the market did. Oh, look at this. 2024, May, June, July. That right there. The market got kind of freaked out. We were going to drop. We didn't. Turn. We did a big rally. Then we got the big rip. Right there. Now, one thing I've recently figured out how to do, let's see if I can do this really quickly without... see if I can remember how to do this. Oops, clicked on the wrong thing. SPX. This was a cool trick I learned / taught myself. I didn't learn it from anybody. I saw somebody post a chart that had it, and I was like, wait a minute. Let's see if I can remember how to do it. Nope, that was not it. Order, pin scale, pin new, right scale, pin new, left scale. There we go. Look at this. Isn't this kind of fun? I just threw the VIX onto one side and the S&P onto the other side. I think this is pretty freaking cool. See our VIX spikes. And that level we were talking about down here, May, June, July, hit that 11 area. Then we spiked it. You can kind of start looking at the visual right there. I thought this was pretty freaking cool. Now look at that. That drop right there actually resulted in lower VIX than the first drop. And this right here spiked VIX the most, and then we just kind of expected, the market expected it to do that. This right here ramped VIX up, but it was a lower level than the high we got back here. When you actually looked at the candle charts, this is probably it. Doesn't mean we won't get a slightly lower low. This thing to a similar like what we did right here. higher low. But we're probably going to take this up, take this back below that 11, back below these super low levels down here. Now, if you don't want to see it on a percent basis, you can go like this, regular, turn this back to regular. And we can adjust it like this. Oh, that's a pretty cool thing. Let you have two different price levels and you can adjust them, move them around. Remember, if you move the chart, you're moving the actual chart you've got up. So whatever you want as the base to compare against, you need to put it, that way. TradingView got cool stuff, man. I do find it interesting how it's little bitty moves like freak the market out. We start buying puts like crazy and then it rips the puts. The other one that was drawn this way, the one that I actually saw. Let's remove this one off the chart. Put this one on. I meant to show this to you yesterday. I totally forgot. I apologize. This is the one I saw yesterday. Look at that. Look at these levels right here. This is PCE, put call ratio, basically. It's back in percent. Love it. Regular. Put it back in regular mode. Look at this. Puts get crazy on these little dips. Now, the market was pretty sour going into... It took a while for the market to get really sour back here. And the puts... This was the fake out right here. Look. Like the market dipped right here. This didn't really go that high. The market dipped right here and people got super bearish. And then we ripped everybody. So if we recover a little bit, maybe up to the 618, take another dip back down, this thing soars. That's a sign that we've really set the bottom and we're going higher. So what is that? It's PCE is what that is. PCE, put call ratio for equities. I was looking at VIX a second ago. I think it's really interesting. Some of these things you can combine together on. I know of no other platform that just lets you throw stuff together like this. I mean, Bloomberg, but I'm not paying like 20 grand a month right there. This, you can get this platform for free, this charting platform right here. And they'll let you do all this stuff for free. Now, when you start adding tons of indicators and stuff, you got to pay for it because they limit indicators, they limit alerts. But I mean, come on. When they run the Easter sale, it'll be 70% off. So just, wait a month and you'll be able to get a whole year for like $200. It's super nice. Excellent tool. Anyway. VVD's an indicator. Apollo is a automated alert system. VVD is an indicator you can use on your own. Right here. Doesn't work on S&P 500. Works on this one. Works on this one. So VVD runs on stuff like this. It runs very slow on my platform. So there it goes. So VVD does this. Finds aggressive reversals in the market. Apollo is this system. And it finds conservative entries in the market on the market roadmap pattern. It works on any time frame. Apollo actually runs on the 30-minute time frame. But it is limited on the number of stocks that it works on. I keep the watch list curated. All right, back to how do we make money today? Russell still working on reversal, just like everything else. Might do that 618 retrace. If we do that and hold, sets the Russell up for the bigger move. That high, this low, somewhere up in the roadmap line. That would make a lot of sense if we came right up in here. Then retraced back down like this. And then made the final move right up in there. That would make almost too much sense to me. That's kind of my prediction right now for Russell. There. Right there. Yes, sir. Right like that is what I expect to happen. We'll see. I guess, you know, keep checking back. We'll see what happens on Russell. CL, what could you do? If you were playing this, I would play out here because I probably have the timing wrong. Like this is probably going to be slower. I would play out here in the fall if you're going to play that bullish right there with a call spread or something like that. And you could do that on IWM, or you could do it on the futures, or you could do it on the, I mean, there's lots of ways to play. Especially if we get to the 618 and hold it. Playing out that far, it wouldn't even matter if we did a lower low hardly. But you definitely want to have an eject point. Like if we get below 194, probably not going to work out for the bullish run. CL, what an interesting twist of events. Came back up to retest again. Now here's the deal. If we break above this trend line, if we get above that trend line, we're probably going for the roadmap line. And if we get above the roadmap line on the daily chart, we're going on up to test those bigger levels I've been talking about for a while, like 80, 90, 105. Been talking about those for years, so this is probably the tell. Brent bottomed out, lower low. I expected CL to do the same, but this one's already starting to run a little bit, so this one has a date with Destiny, or that Destiny's name. Destiny's name is roadmap line on the daily chart. Laughing at my own joke before I can get it out of my mouth. This is really bullish for going higher. Remember, we're talking about $3 a gallon here. The smaller pattern, you can set your alert right here. When we're breaking above that 618 zone, 61.8% retrace zone from the February high through the March low on gasoline futures, that sets up this bigger potential pop right up here. And I might play that with a call spread. I'll think about it. Sergey, you thought silver worked out good for us. We could make some serious money on gasoline. GC, not what I wanted to see. This is what I was afraid of, though, when we got into the Wednesday trade. We were sitting at all-time high, pulling back. Not what I wanted to see. It's very high probability we get the correction back to the roadmap line. Bitcoin. I already kind of talked about that. I need this to break above that trend line. This is a substantial resistance at this point. And we're stuck at the daily roadmap line, which is another substantial resistance. We basically aligned both the spot market and the futures market together by hitting the roadmap line yesterday. I do not want to see continuation lower. But that might be what we're about to get. 618 zone right around 81,000. I want to see that come down here, hold, break back up through, go higher. I still, like very high conviction, expect this to rally on up to this zone. It's just not doing it though. Like you gotta, at some point you gotta sit there and go, well, the realities of price action are that it sucks. So be careful. Ether still can't get off the mat. It's got 2 black eyes and a broken arm and not even close to any kind of upside resistance. This one might break down below this support. This is like the uh-oh support, and this is like the last line of support I expect to hold. We get below that 1500, probably going under 1,000. NKD, I really wanted to see this turn, and it might still turn. We're seeing the signs that they're starting to improve global liquidity from the central banks. That usually takes like 2 weeks to start trickling into the market. So we might still have to wait till April is what I've been saying. All right, dollar still doing that consolidation thing. Euro USD might come back to that roadmap line right there. We might need that to happen before this turns and the dollar goes down and the euro goes higher again. It's a lot of people got real, like, I was showing Goose this number yesterday. I don't even know if I posted it in Discord where I can share it. Let me see. See if we can find it. Yeah, I think I shared it out to, I think my team posted it to Telegram. Maybe I shared it in the main announcements channel. Let's see. Yeah, I did. Here we go. This is up right here. Just to put it in context, how dramatic rotation out of the US, which is US dollars, and into euros, which CTAs are now short 34 billion of US equities. That's the potential for a big short squeeze. And they went long 52 billion. This is in US dollars, $52 billion of euro equities to try to take advantage of that. Not just the, it takes advantage of 2 things. It's the euro dollar spread, and it takes advantage of the fact that Germany announced they were going to borrow $900 billion. And when they borrow $900 billion, they're going to pump it into the economy, buying weapons and infrastructure stuff and all that sort of stuff. So this was a play moving, you wonder why Mag 7 got hit so hard. CTAs liquidated, moved to euros, moved to the European exposure to try to catch some of that pop. Now, $900 billion is not going to happen tomorrow for Germany. We're talking about something that's probably going to play out over 2, 3, 4, 5 years. So making a dramatic change that fast, kind of stupid. All that says, though, is that everybody in mass realized they needed to reposition to take advantage of that. But this will come back to haunt them, because right now they're short $34 billion. They're not at zero. They didn't go to zero. They went short $34 billion. This will come back to get them right there. That'll come back. And when I say them, I mean the algorithms and the hedge funds that manage those algorithms. I say them and they a lot. It's, the powers that be. The other one that I found extremely interesting here, this fits in the same realm here. Goldman Sachs estimates there is $29 billion of cash waiting to go into the market inside basically pension plans, retirement plans. This is managed money. This is not you and me putting in our IRA. This is 401k, managed 401ks and pension plans from like teachers unions and stuff like that. Public utility union, stuff like that. This is among the highest going back for 25 years. If we go compare these numbers right here to the S&P chart, these spikes usually precede a large upside move. Like that was COVID, large upside move. This one right here, they got a little bearish in 22, large upside move. This one right here, 2018, got a little bearish, maybe into 2019. We did a kind of a blow off top into early 2020. Roll on back. These were market bottoms also. So those managers, when things are turning a little sour, tend to sit on a bunch of cash, but they have to deploy it at some point. They can't just sit on cash. That's 29 billion. Remember what I say about the value, the market cap that gets put out there is about 10 times the money that gets put in. This 29 billion turns into 290 billion. Combine that with the CTAs, if they were to get back long 34 billion, that's 340 billion in market cap. Now all of a sudden we're getting up to, you know, 0.6, 0.7 trillion dollars, which goes a long way to what we shaved off of the market in the last few weeks. And then all the other hype. It's kind of interesting when you think about it, like when you put these little pieces together. I don't know of anybody else that talks about this stuff, and nobody taught me this. This is all stuff I figured out on my own. So how do we make money today? Let's go look at the things moving, things popping, things dropping. I go pull everything moving $2 or more up, put it on the gainers list, $2 or more down, put it on the decliners list. Things move between when I make the list and when the market opens. So it may not be, you know, decliners may not still be decliners. The market does move, but the list does not automatically update. So I use the Market Chameleon sites to do this. And that looks like the lowest low right there. This is a biotech pharma. Anytime pharma leads the list, it's a dangerous day. I just say that right off the top. There are only 4 gainers on this list. This might be an opportunity for 316 right there. That daily close above 2, you know, basically above 277 sets this up for 316 on the upside for ALNY. Lockheed Martin, LMT. This is, despite being a popper, we are under the daily roadmap line, and this can easily go on a retrace. Danger, 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 danger. We already hit it back here. Retraced, held. Can we pop through? I am not certain. We did hold the minimum retrace at the 50%. This could put bullish pressure on it. There's the low. If we're going to do it, we'll get above the daily roadmap line, back above this prior high from beginning of March. And then we'll come ripping on up here above the 618 zone around 536. Probably stall out somewhere around 592, retrace before we can push it on out to new targets above 620, new all-time highs there on Lockheed Martin. That's the bullish case. Bearish case, we break down below this 618 and take another spill down here to 400. That's a big range. RGC, that's hitting targets. Not much to do there. That's almost a dumpster fire chart. Biotech, danger, danger, danger is what that says to me. DHR, not sure this is done on the downside. I would expect it to take a dip down below 175. Decliners, FedEx announced things are still not going very well for them. Another downward revision on earnings and business. They're gonna have to get their crap together. This could turn into something worse right here for FedEx. Now, looking at the bigger picture, this might just all be part of the big correction here. We did this big drop right here, first move up, retrace. Maybe maybe this is a bigger correction that's not done. Even though this looks like a wave 1, and wave 2s are typically fast, this might be a prolonged wave 2. First move down, the retrace. Could put the need for FedEx to come on back down in the 120 area before we can finish this correction up right here and then go higher in the years to come. So this may spend the rest of this year, or at least well into the summer, underperforming any recovery that we have. ASML, as I keep talking about, I highly expect this to dip into the low 600s before we make a bottom and can go higher. FNGA, just chopping around down here at the bottom. Lennar, I do expect this to come on down to the $97 area on LEN. MAR, Marriott International. That looks like we're doing the bigger correction. We're probably going to find a bottom somewhere around 200. App is holding the roadmap line pretty well. If we can break up through the 387 area, looking for 588. That is a giant upside potential right here. That was a outsized correction, but looks perfectly normal on this scale. Right there. Nike. Boom. Told you it was going lower low. We made the lower low. I'm not entirely sure it's done on the downside yet. I mean, anybody that's been with me following Nike, whenever I drew it, I mean, I've been following this correction for a couple of years now. We got that ideal target, even a little extra now. Still has potential to come on down to 60, possibly lower than this low back here during COVID. Still possible. Not sure we're done yet, but we're getting there, getting close. Getting close. Unless this thing's going to go out of business, which also entirely possible. May not think so, but people make bad decisions and companies go out of business. MSTR. This is fascinating. About to break through the downtrend line. If we can stick that, despite all the crap going on with Bitcoin, this might be a leading indicator that we're going to break on out. Resistance up there at 390 area. We get through that 390, 400 area. Sets us up for a potential move on up to 600, 700, 800, 900, even 1,000. I'd love to see it. This one bright spot in the nasty world of crypto right now. DHI, DR Horton. Looks like that's going to get a big flush with the Lunar, CRWD. Gambling here. If we can hold the roadmap line here at 350, we could go higher. 490 on the upside. GE Veranova, break above the 368 level. We'll put it up to 482. PTIR is just PLTR leveraged. NUE looks like that's going to go for a new low. Caterpillar looks like that's going to go down for a new low. This is a canary of the economy coal mine. If we start breaking down below 310, things might start getting worse in the economic wise. And remember, the economy leads the stock market by 6 to 12 months. So economic wise, turning sour. We can see those economic indicators can lead by 6 to 12 months before we actually see something blow apart. So MU just chopping. Despite the good news in the pop, we got a slam down when we actually opened, which is just freaking stupid. Still in the zone. Support down here, resistance up here. That is 80 area on support and 120 on resistance. As long as we stay in the middle, more sideways. That's what I have been expecting right there. CG. No. Be like water? No, not at all. And CG right here. MSTR is not an indicator, like a historic indicator of Bitcoin at all. CG potential to make another dip. Resistance right up here at 240. Carvana. Consolidating under the roadmap line. If we can break above, get it back above 230, we could go on up to 317, but I feel like a broken record just saying the same levels every day here. SPXL just consolidating at the lows. Coin consolidating at the lows. SAP potential bounce off the roadmap line on the European version. On the US version, we still got downside to go. Apple potentially bottoming. My target was just a shade lower than where we are. SMH. I had an alert. SMH maybe bottom, but I still was kind of expecting that to make a lower low below 200. Nail still has downside potential. TSM sitting on a support, and if we break it, we're going down to 135. Netties almost back to the roadmap line. Watch for that to hit and hold right there. If you don't have the roadmap line, links in the description, or you can go to the channel homepage and watch the video. Either one. But $5 gets you the easy button to put it on your chart. Still holding that downtrend of highs and the roadmap line. If we can turn and burn, get back above that 618 level at 104, we could be looking at 111, 112 on the upside. AMAT sitting on support. I'd love to see it hold and turn higher, break above the roadmap line at 175 area right now. BABA, little retrace. We want to see this hold the 125, 130 area to turn higher and get the 160 to 200 area on the upside. BABX, BABX would be the way to play that leverage without buying options. SOXX coming back down. Can we hold the support that we've now established and go higher? This did make a lower low. Yen, potential to go higher. Snow, just sit on the roadmap line. I want to see that get higher. NVO, potential to break down and extend it on down to the 50s. UPS, moving down in sympathy with FedEx, Royal Caribbean, sitting on the roadmap line, potential to break above the 245 and indicate we're going up to 290. But if we flush on down, we'll probably come down to the 150 area. PDD, consolidating right here. We break above the prior high at 133. We could see this making a large upside move, potentially to 180. Near term, 137, 140 resistance. AVGO, sitting on the roadmap line, just consolidating. Not going to move without the rest of the market, probably. FUTU, back to the 618 without breaking out to 140. Upside pressure still on. CRH, back to the roadmap line, potential to bounce, get back above 103, potential 113 on the upside if we do it. TUR, Turkey is continuing to flush down the toilet. This may go all the way back down to COVID levels, back down in the 20s. BK probably still needs to retrace to the roadmap line, but financial earnings coming up starting in like 3 weeks. So watch for this to turn as money flows into financials. F&G annuities and life. It's getting whacked. This may come on back down in the mid-20s. FAS, potential for this to be done on the correction. Break back about 166 indicates we're going on up to 200, 207, possibly even 240, 50, 60. TCO, potential to flush on down. Technology bulls, leverage not great. Shopify, just chopping right at the roadmap line. We break back above the 113 area. 136, 137 upside right there. That's the list. Bias for the day. Caution, extreme caution. Watch for that 618 retrace in those smaller time frames, 30-minute, 1 hour time frame there. If we can hold that 618 right there at about 55.90, break back above the 30-minute roadmap line, game on for going higher. That's what I'm watching today. Be careful out there. I'll be back live at 11, showing off the Apollo algorithm, which is booking its highest win rate for 7 days that I've seen this week. Absolute crazy. Over 94% wins. And I'll do that on Zoom. I'll post a link in Discord. So if you're interested. And it's on Telegram already. I know the team's pushing Telegram really hard. They told me they were. Otherwise, I'll see you on Monday. We'll be back at it again. Same bad time, same bad channel. Hunting for stuff in the market. Watch for that lower low today. That activates going lower next week. Have a great day.